Welcome to the Henwood Edge. I'm Chris Henwood with North Point Bank. We're going to talk about credit scores today. Now, everyone has a credit score and it's important that we keep track of them. The way I think of credit scores generally is they're kind of like the spinal cord of your financial health. They run through everything. Even some job situations require that you get a credit score pulled and it be good or you won't get the job. And we definitely know it's needed when you're applying for a mortgage. So there's a few things that I wanted to kind of go over with everyone to explain what exactly the different types of credit scores are, how they impact the decision making, and kind of what you can do about it. So the first is that there are two types of credit scores. There's your consumer credit score and then there's your mortgage credit score. The consumer credit score is the one that shows up on your credit card statements, and if you subscribe to a service like Credit Karma, like I do, to keep track of it, it'll give you two of the three bureaus on there so you can kind of get a good sense of where your credit score is at any given time, when it goes up, when it goes down, what factors are affecting it. It's a very useful tool. And it's available for both types of devices through whatever store you use to get those things. And you use those for credit cards, for leasing or buying a car, or personal loans. They'll use that consumer score. But what we're really interested in is your mortgage credit score, which is a little bit different. And the way that it's different is that it's on average, it's usually lower than your consumer score. Because if you think about the way they do this, your consumer score is about a 10-foot look deep into your credit history, whereas the mortgage score is about a 30-foot look deep, deep look into your credit score. So, and it weighs things a little bit differently. The standards are set by Fannie Mae. We as a lender don't do it. No lender has input into that. That's a Fannie Mae guideline we all have to follow. So it's kind of the same for everybody. Now, what does that mean? That just means that you need to protect your credit score before you really start looking for a home, and you really should know what your credit score is. Now, when you get pre-approved for a mortgage, one of the things they're going to do is they're going to do what's called a hard pull on your credit. That hard pull usually knocks down your credit score about anywhere between 5 and 15 points on average, but that gives us a real good look at your credit history, which is one of the key important components for getting approved for a mortgage. Now, when we get a look at that report, we can see where there might be areas you can improve your score. There may be some things that you will have to do in order to be approved for a mortgage, and there may be some things that will just be good for you to correct long-term for your score to improve and your overall, credit scores to remain high. But it's very important that you do this early in the process. The sooner you find out about problems and the sooner that I can help you with problems, correcting them or addressing them, the better you're going to be when you're shopping for a home. The last thing you want to do is be under contract, then go look into these things and find out you have a problem and miss out on the house that you really want. So I would recommend everyone to, start the process early. Give me a call. You can text me, you can email me, you can call me on the phone. We can go over your credit score and figure out where you need to be addressed. And thank you for watching the Henwood Edge.
This is not a commitment to lend. All loans are subject to credit review and approval. Not all loan programs are available in all states. Contact a North Point Bank loan officer for further details.